SPX 4-hour chart analysis. Trading at 7,089.45, just 0.5% below the 52-week high of $7,126. Prices extended well above all key moving averages. 21 MA at $6,738, 50 MA at $6,709, and 20 now at 69 and 60,000 blowers. This bullish alignment confirms the uptrend remains intact, though we're seeing significant separation from support levels. The RSI at 93.17 is critically overbought and approaching the year high of 96.97. Historically, SPX has spent only 42 days above 70 this year, suggesting these extremes don't persist. We're also trading near the upper Bollinger Band at $7,236, and the data shows 89 upper band touches versus just 34 lower band touches, a pattern that typically precedes mean reversion. MACD remains bullish, but momentum is overstretched. Key support sits at the 21 MA around $6,738, with secondary support at $6,692. For swing traders, the risk-reward is unfavorable here. With an entry score of -25 and extreme overbought conditions, I'd wait for a pullback toward the $6,740 zone before considering new longs, or look for short-term mean reversion plays targeting the 21 MA. SPX daily chart, trading at 7,089, just 50 basis points off the 52-week high of $7,126. We're seeing extreme technical conditions that warrant caution here. Prices extended above all key moving averages, the 21-day at $6,738, the 50-day at $6,739, and the 200-day at $6,692. While this confirms the intermediate uptrend remains intact, the distance from these averages suggests we're overextended. The RSI at 93.17 is approaching the year's extreme of 96.97, marking only the 42nd day in overbought territory over the past 12 months. Historically, readings above 90 have preceded pullbacks or consolidation periods. We're trading within the upper Bollinger Band at $7,236, with 89 upper band touches this year, typically a sign of exhaustion rather than continuation. Key support levels to watch: the 21-day MA at $6,738 represents initial support, with stronger support at the 50-day, around $6,799 for swings traders. This is not an entry point. With an entry score of -25 and extreme overbought conditions, the risk-reward favours waiting for a pullback toward the 6,790-6,750 zone before establishing long positions. Consider taking profits on existing longs. SPX weekly chart analysis. Trading at $7,089, just 0.5% off the 52-week high of $7,126. With a strong year-to-date gain of 19.34%. The moving average alignment remains bullish, price trading above the 21-week at $6,738, the 50-week at $6,779, and the 200-week at $6,692. This configuration supports the intermediate-term uptrend that's been in place for several months. However, the RSI at 93.17 is flashing extreme overbought conditions, approaching the year's peak of 96.97. Historically, the index has spent only 42 days above 70 this past year, suggesting these extremes typically resolve with pullbacks or consolidation. Price is trading near the upper Bollinger Band at $7,236, with 89 upper band touches over the past year, indicating frequent testing of overbought territory. Key support levels cluster between 6,692 PAD and 6,778 for where the major moving averages converge. For position traders, this setup warrants extreme caution. With RSI at multi-month extremes and limited upside to resistance, the risk-reward favours waiting for a pullback toward the 21-week moving average around 6,738 before establishing new long positions. Existing positions should consider profit-taking or tightening stops.